1, which is to give us a little idea our accounting is going to be entailing. Now, chapter 3 is going to be all about how we journalize and what to journalize. So this is going to be all dealing with the transactions at hand when we're dealing as a bookkeeper / accountant. All right. So let's start off with the chart of accounts. All right. So a chart of accounts, okay, is basically a list of all of the accounts and their either respective account numbers, if they have one, any details on what account type they belong to, and et cetera, et cetera. Basically, it's our organized graph of pretty much all of our accounts and what we have existing as part of our chart of accounts. Now, with this being said, you need to have a chart of accounts in order to journalize. Okay, so yeah, I'm pretty sure you guys are kind of familiar with this, right? Now, one thing that the accountant can do is they're the ones who lay out the chart of accounts. They're the one who says, I want to do this. They're the one who said, I want to do that. I want you to do this. Journalize it this way. So they're the ones that's keep making the bookkeeper follow a set of rules. And this is what they have to give them to them. They need to provide a chart of accounts for a bookkeeper to properly journalize every transaction. So if there's an account that does not exist, the bookkeeper needs to go to the accountant and says, we don't have an account for this. All right. And then the accountant must create one. Okay. Now, how the chart of accounts is organized is based on account type. All right. The reason why I say that's because it's never going to be organized based on the account number because you don't have to use an account number. It's not necessary. If you can memorize like 1,000 accounts without even referring to the list, then you know you're in good hands, right? But in this case, you don't need to have a account number to organize your information. It just helps you. So instead of memorizing account names, you just memorize their little code, and that can also give you some kind of mental picture of saying, yes, I do have this account. It's this number. Okay, so you can choose to use it, and whatever sequence you want to apply for it, you may choose whatever. It doesn't have to be a number per se. It could be a number and a letter. Like, for example, I can call my assets, right? They have the letter A in front of it, right? And then that way I can determine what my assets are because they're going to have a letter A and then a serial number after it, all right? And so on and so forth. My liabilities can be an L and the rest of my sequence, okay? So it's whatever sequence that you want to use as an accountant / bookkeeper, right? You get to determine the rules, so you can create that. Now, this right here is just a little short snippet of what it should look like. It should look like this. You have your account number and your account name, and then and it's organized by account type, okay? Never will it ever be in alphabetical order. So, example, you're checking, right? Obviously, the right after is going to be your accounts receivable, so it's never going to be in alphabetical order. And you can have a million accounts, and every time you create an account, sometimes that number is already used, so you might have to create some kind of sequence to be able to differentiate the account names. But yes, so it's basically a list of every single account that exists for you to sort out, record, and organize your transactions. Okay? So let's go ahead and look into the general journal. Okay? So what a general journal is, it's basically a book that records daily business transactions. Pretty straightforward. If you guys done it manually, so you guys are pretty familiar, it's just a notebook, all right? And you either title it for whatever section that you are responsible for, or if you have a general journal that entails everything that's in your business, then you're going to have this one special book. All right. Now, yes, I can see there's a lot of things I want to talk about. So I'm going to break it down from one bubble to another. Okay. So the very, very first rule that I'm going to talk about is when you journalize everything, it's going to be in chronological order, meaning the day it happens, it's going to be in the order by the date. So that's the number one thing that you need to recognize is you need to recognize when this transaction happened. All right. So that's the first thing that you're going to write. And you're going to write it in, of course, the section that says date. Second thing that you're going to have to notice is that when you record, you're going to record your debits first and then your credits last, or your credits second, however you determine it, right? And how we write our journals, or how we write our debits and how we write our credits, is going to be this. Your debits accounts are always going to be left aligned. Your credit accounts will always be indented, okay? And your description, as long as it's in parentheses, you can italicize it, center it, make it smaller, whatever it is, as long as it has parentheses, that is going to be your full description of what happened that transaction. And typically, of course, when you're journalizing, right? If you're the bookkeeper or the accountant and you're looking at your transactions, the more detailed you are in every single transaction, the more you're going to recall the transaction actually happening. Now, if you're a person that deals with hundreds of transactions per day, even jotting down something significant such as who your vendor was, just the person that you made contact with, or who did you write the check out to, usually that will just indicate for you exactly what the day that it happened and what actually happened. So in this case, be your description, your actual description to describe your transaction will always be in parentheses. But how we journalize is going to be the account name, and again, anything if it's a debit account, so meaning that we're trying to increase with a debit or decrease with a debit, it will always come first. That transaction will always come first. And you're always going to be able to recognize it by left aligning it. Credits are always going to have an indentation. All right? And then what a post reference is the post reference is going to be basically the account number if you have one. Now, if you don't have one, then it's not going to be you're not going to use it. But what a post reference does is it's going to be, for example, whatever account that you use for the description, the account name, whatever associated account number is going to be your post reference. And where you're going to get that from is through your chart of accounts. For example, so I have cash as 10100, right? If I go back to my chart of accounts, that's exactly what my account number is. It's 10100 for checking. In this case, I have it as checking, all right? But so on and so forth. So you're going to get your information for the post reference from your chart of accounts, and it's going to be associated to whatever account number they exist as, okay? Then lastly, but not least, we're going to be talking about your debits and credits, of course, right? Referring your debits and credits as left and right. This is what's going to look like. You have a column. The left side is going to be all your debits. The right side is all going to be your credits. One thing that you need to do as making sure that you have an equal and opposite reaction is that you need to make sure that your debits equal your credits at all time. So for example, the first example, when I bought my furniture for cash, I bought it for a total of $500. So $500 is going to the debit. The equal and opposite of a debit is going to be my credit for $500. Okay? Then we're going to be looking at the exact same scenario below, where we deal with rent expense, prepaid rent and you wrote it for a checking account. So in this case, I have $5 worth of rent, and my rent expenses or prepaid expense or prepaid account, prepaid rent is going to be for $1,000, right? If I add these two up together, it's going to give me a grand total of me writing a check for $1,500. So this is where I go ahead and say my debits, so my total debits, is equal to my total credits. So here's my action, and here's my equal and opposite reaction right here. My total debits is equal to my total credits. Any questions in regards to how a general journal looks like or how to write one?
No.
Okay.
Got that.
No questions.
Okay. So now we're going to be talking about transaction analysis. So this is very, very important, and especially if this is your first time bookkeeping. These 7 steps are very important for you to have on the side. Okay. So just give me 1 second. All right, so here, the 7 steps of transaction analysis. So number 1, okay, so when we are looking at a business transaction, right, we'll be given scenarios, and this is what we need to take and use these 7 steps of transaction analysis in order to understand what the transaction is at hand. Determine whether it is significant enough to journalize. All right. So this is the very first, very, very, very important steps for you to go ahead and successfully journalize your journal. So the first step is going to be recognizing that a transaction has occurred, right? So how is that going to be done, right? Obviously, you're going to have your source documents, right? If a receipt has happened, if you physically went to the store and you bought something for the business, obviously right there, did a transaction occur? Yes, it did. And the proof of that transaction is going to be your source documents, right? Other examples would be, did you receive a bill? Did you send an invoice out? XYZ. So did a transaction happen, right? Second thing that you're going to understand is you have to understand, how does this transaction affect your business, right? And, think about it. If I went to the office store and I bought supplies for my business, I'm going to understand, how does this transaction affect my business, right? In this case, I'm buying supplies in order to operate my business. So definitely this transaction is significant enough for me to record it, all right? Then step number 3 is going to be to determine which accounts are affected and whether the transaction increased or did it decrease a certain account, all right? So this is where we're gonna determine, okay, what did I do? Well, I increased my supplies, but I had to spend cash for that, all right? So I'm determining what my transaction happened, how did it affect my business, and what accounts am I going to affect? In this case, I'm affecting my supplies and my cash. Then we're going to go for step number 4 is to use your business chart of accounts to see if those accounts even exist. Do I have an account for supplies? Do I have an account for cash? And in this case, I'll just go ahead and blankly say, yes, I do. Okay? And this is where you're going to go ahead and, for step number 5, is determine or use the debit and credit system. Okay? And this is where the accounting model is going to come into play. This is where, right, we're going to have to sit and think. If I increased my supplies, how will I use my debit and credit with that? And we're going to use the accounting model. So I increase my assets because supplies is considered an asset to me. I increased my asset, so I'm going to increase it with a debit. And then I need to determine the equal and opposite credit, which I know I spent cash for it. So my cash is an asset. I'm spending my money. I no longer have the money in my hand. So therefore, I'm going to decrease the cash that's in my hand. And in order to decrease an asset, we're going to credit. So here, I've determined my accounts. I determined the balance of them. I've determined that I used my debit and credit system, and I applied it forth. Step number 6 can be relevant to you. So again, if your company has multiple books for multiple sections in each of the business, right? Maybe you have one for accounts payable, one for accounts receivable, one for inventory, and one for just business expenses in general. Okay? You're going to determine which book you're going to record this in. For this class, you're only going to have one book only, and that's just going to be the general journal. It's just one book, okay? One book to record everything that happens in our business. So in this case, step number 6, does not really apply unless you're dealing this in real life. Okay? And then lastly, number 7, just like the Nike logo, just do it. Go ahead and record the transaction. All right? Any questions in regards to the 7 steps of transaction analysis? Okay.
No.
And for you guys have the experience for it. So for you guys, you may not have questions until we actually go look into our exercises, and we'll do it. Okay. So with that being said, next thing I'm going to introduce to you is correcting entries. Okay. Now, because you guys are in this sense, right, we're pretending we're brand new to this, right? We're going to make a bunch of errors. For this class, make those errors, because at the end of the day, right, at the end of our class, you're not going to be professional. You're going to constantly be making mistakes. So this is exactly why, in this case, we are trying to help you professionalize yourself by having you be able to correct an entry, right? Nobody's perfect, okay? But there are some rules and some guidelines, especially if you're going out into the real world. You cannot scratch out, erase, black it out, white it out, whatever you want to call it. You cannot scribble it out. You cannot change a transaction if you made a mistake, all right? You're just going to have to own up to the mistake, and you're just going to have to fix it or correct it accordingly. Again, for this purpose of this class and this class only, and plus we're using, we're using the computer, right? We can easily press the backspace key. For this class and this class only, I'm going to allow you to be able to make those mistakes, okay? You can erase, you can backspace, you can scratch out things, okay? Because we're practicing. But here is going to be 2 examples of how you can correct an error in your journal, okay? So we have 2 ways. The first one I'm going to teach you is going to be the reverse and reentry, okay? And the second one is going to be called error cancellation. Now, when we reach the end of this, I'm going to determine which one's the easiest and which one is widely used, okay? So first one is going to be reverse and reentry. It's going to require 2 journal entries, right? Pretty much just like what the title says, right? You're going to reverse the transaction, and then you're going to re-enter it with the correct amount, okay? Whereas error cancellation, it's only going to require 1 journal entry, and what you're going to do is you're going to find the difference between the errors, and you're going to correctly place them in their accounts with the different amount, okay? All right, we're going to go ahead and take a look at each one and determine each one, okay? So we're going to talk about the reverse and reentry, okay? The best way to understand this is as if you put yourself in the position where you're going to go out and you bought these supplies for your company. You went to the store and you bought these supplies, okay? So here, the scenario is on September 15th, you purchased office supplies with cash in the amount of $65, right? And then, of course, sales tax is already included, right? And you recorded this transaction as $56, okay? Correct this entry. So in this case, maybe you ran to the store, you went to the nearest location, and you made the purchase, right, with cash. But when you come back, you're exhausted, or you place the receipt somewhere else, or you didn't look at your receipt, and you're like, oh shoot, I have to record this transaction. You record it, but you recorded it for the wrong amount. Okay? And let's just assume either the same day or the next day, you remembered to attach your receipt to the journal and realize, oh, I wrote it in for the wrong one. Okay? So in this case, I am going to take it as this. Okay? So I bought the supplies for the wrong amount. If we use the scenario where we're physically going to reverse the transaction, how do you reverse this transaction? Okay.
Just put the correct
Okay,
amount.
that's the second portion of the journal entry. The first one is I'm going to go back to the store and I'm going to pretend I'm going to physically return my supplies, right? And I'm going to get my cash back. So that's my way of describing this scenario here. I'm going to reverse the entry, okay? And how do I do that? Again, I'm going to go to the store, I'm going to return the supplies, and I'm going to get my cash back, okay? For the amount that I wrote it for, okay? And then what I'm going to do is I'm going to turn around and I'm going to repurchase them for the correct amount. And in this case, I'm going to take my second entry, which I'm going to journalize it with the correct amount right here. Okay, so I have 65 instead of 56. And this is going to be to correct the error that happened on September 15. All right. Does this one make a lot of sense? Okay. Again, just place yourself in that position where you're going to physically return the items and then you're going to buy them back. Straightforward. Okay. Now with error cancellation, okay, we're going to determine first things first. What is the difference between the two accounts that I'm fixing my error for? And in this case, I wrote it for 56, but what I need to determine is how much is it supposed to be, right? So I'm going to take my 65 and I'm going to subtract my 56, all right? And I found out that it's $9. Now with this $9, I need to think very carefully because in this case, this is where most people make their second error, okay? I'm going to try to determine which account needs that $9 or needs to be taken out that $9. And in this case, I need to increase my supplies by $9 and I need to decrease my cash amount for $9. Okay? Because again, if I use cash, right, I can just easily whip out the money I have in my pocket and count it. Right? If I started out with $70, all of a sudden I have $5 in my pocket, I can already assume I spent more money than what I should have, than what I've recorded. So in this case, I know I need to increase my office supplies by $9, and I'm going to decrease the amount of cash I originally have in my hand by $9 more. And that's how you do the error cancellation. It's only one journal entry, and you're going to journalize it for the difference in amount. Okay? Now, as you can see, this one, you can cause a lot of mistakes because a lot of people, they would have said, oh, I'm going to, the difference is $9. Okay, so I'm going to debit my cash and I'm going to credit my office supplies. then now you're decreasing your amount of office supplies by $9, and then you're gonna have to enter in another correcting entry. Okay, so in this case, if you're very good at calculations and you're very careful of what you're doing, then utilize the error cancellation. But what most companies and what is most recommended is going to be using the reverse and reentry, because here you're reversing the entry, right? You're fixing your mistake by returning the items, and then you're repurchasing it for the correct amount. In this one, you're less likely to make another error in this one because you are safely returning and then re-entering it in for the correct amount. So what you're doing here is essentially you made your journal, you're zeroing out your journal and redoing your journal. Okay? So this is most recommended and widely used because there's no room for more errors to occur. Okay? Any questions in between the two different types of correcting entries? Okay.
No.
Right.
I
Yes,
have a question,
go ahead.
just real quick, because both of you guys, or actually all of you guys, have experience. Did you do the correct or the reentry style or the error cancellation in your past employment?
Well,
No,
for
A
me,
combination?
I really never did journals anywhere I worked, but if I wanted to do it, I would have done the rewrite and re-enter.
Okay.
That one
I
to
just
me
kind of
was
assumed
that. Yeah, I mean, I like that one better. I mean, I get the second one because it's fast and it also lets you know, oh yeah, okay, that happened. But I like the other one better because it's complete return and then a redo.
Yeah, that's how the big companies
When I'm
do it. So.
scanning over, right? When I'm scanning over for something later, I'm looking for that one amount. I'm not looking for the $9.
Right, exactly.
So
Okay, that was it. A little off topic, but I just was trying to get clarification.
No worries. That's actually pretty valid because it is within subject. Neela, did you have an input?
no, we
You
did
did. You so. Yeah, you
Reverse.
do the reverse and the reentry. Yeah, because again, this one
I like that
less room for error. Okay.
Right. Because you're starting from
Exactly.
zero,
Exactly.
so.
Yeah.
Perfect. Okay, good. Now we're going to be looking into T accounts. So T accounts, right? It's pretty straightforward, right? It's a simple way to make sure that you know how much money you have at the end of the day, or knowing what balance you have currently in each account. So for example, our journal entry, right? It doesn't tell us much details in regards to actually how much is in each account. All we know is we're just doing the daily transactions and that's all. We're taking in money or we're taking out of money. We don't know how much our ending balance is at a certain given point in time. So in this case, we generally can use a T account on the side if you're just doing a quick math equation, right? Because rule of thumb is if you're just doing a whole bunch, if you're just writing a bunch of checks, right? The one thing that you should always make sure that you do is before writing the check is making sure you have enough money in the first place. So rule of thumb, so that's what this is for. This is in case you're doing your journal and you don't have your ledger available. So again, we'll talk about the ledger in a second. We're just doing a journal and you just want to do a quick calculation. And that's what a T account is. You're just going to draw a T on your paper. The top is going to be your account and it's pretty straightforward, right? If it's left, it's your debit. If it's right, it's your credit. And you're going to start with a beginning balance, right? Anything happen between is what you're going to determine. And at the end, you're going to total up your debits and you're going to total up your credits and you're going to find the difference, right? Do you have more credits than you have more debits? If you have more credits, then you're in the negative. If you have more debits, then you still have cash available. All right, and here's the journal that associates to this proper T account right here. So here, I started off with my balance with 5,124. I'm sorry. 5,124. That's what I started out with. Here, I journalized that I increased my cash, and then here I decreased my cash twice, right? And my T account just gives me a summary, a quick update of how much I still have cash left available. That's all that T accounts are. Yeah, it's up to you whether you would like to properly use the T accounts. It's not mandatory for you to use it. It's just, again, it's just a little technique for you to just summarize up your journal, and you can place this in your journal on the scratch piece of paper. But in this case, we're using electronics, so you could do a little sum up table, whatever, however you want to design it, right? It's just for the main fact of just finding a balance at the end of the day. Nothing you need to know about this, not required. It's just a little accounting that can help you out in the long run. Okay? But what we will be focusing on is going to be the general ledger. Yes, so the difference between the journal and the ledger is pretty straightforward, right? With the ledger, it's a list of all of your accounts with their respective balances. So in this case, we're looking at every single account. And with every single account, you have a list of all your transactions that occurred. But the difference is that you're going to have an additional table or an additional 2 columns for the credit and the debit side. And again, same concept applies. No matter what you're doing, when you do a transaction, you're updating each account and you're going to know how much your account balance is at the end of each date. Okay, so after the end of each transaction, you're going to know how much you have. So for example, using the journal from before, right? I recognize that in my bank, I currently have 5,124. I increased my cash on September 1st by $154. Therefore, my balance is now 5,278. Then on September 2nd, I made a purchase of a rent expense for $500. So therefore, I decreased my account, but I still have $4,000 left in my account. And then so on and so forth. The next transaction that happened, I spent more money. I spent $65. So therefore, I now have $4,713 now. So the real difference and the great thing is we will be looking into this when we dive into our fictitious business. We will be utilizing our general ledger. And this is ultimately going to help us keep track of every single account, because then we're going to find out a couple of things, right? Especially when we're dealing with people that we owe. We owe this amount. We paid this amount. This is how much we owe this specific vendor, right? And we're going to be looking at what those ledgers entail, okay? So in this case, this is my cash ledger. It's giving me a total balance at the end of every single transaction that occurs, okay? And you usually post to the general ledger after the transaction has been recorded in the general journal. So you need to place it in the journal first before you can validate this amount in your ledger, all right? And we'll talk about that when we dive straight into chapter 4. We'll talk about the accounting cycle, which includes step number 3 and step number 4. First, you got to journalize, and then step number 4 is going to be to post to the general ledger. Okay? Any questions in regards to the ledger?
Not yet, I don't.
Perfect. Okay? So again, here's a little recap of what we just learned. So we learned about what the chart of accounts does. Here's a perfect example of what a journal should look like. Again, your credits should always equal your debits. Okay, we have a little like a little summary of your T accounts. Down below is going to be your typical correcting errors for your entries, right? The two different ones. Okay, one thing I forgot to mention is when you are correcting an entry, you must choose one or the other. You cannot do a both at the same time, all right, for one transaction, because then you're gonna create more errors in your journal, right? You can only choose one or the other. You cannot do both, okay? And then lastly, the difference between the ledger and the journal, right? The journal is just the daily transactions. The ledger has the amount of associated account balance at the end of the transaction. Okay? No questions. I'm going to go ahead and stop the recording.